As 2024 gives way to 2025, it will soon become time to start gathering the information you'll need to file your 2024 federal income tax return. And you may be wondering if anything has changed for this year, or where you can find any updated tax information. Well, you've come to the right place. I'm the Tax Geek, and here's what's new and what's changed for 2024, oversimplified. For most Americans, there will be very few changes in the tax laws that will affect them. Inflation adjustments will increase the standard deduction and tax bracket breakpoints, as well as the upper adjusted gross income limits for many tax credits and deductions. For 2024, the standard deduction, and by extension the requirement for filing a tax return, is gross taxable income of $14,600 for a single taxpayer, $29,200 for married couples filing jointly and qualified surviving spouses, and $21,900 for head of household filers. Taxpayers over age 65 or who are blind are entitled to an additional $1,950 standard deduction if unmarried, or $1,550 if married. You'll find any inflation-adjusted amounts that apply to any of the videos on this channel in that video's description, as well as in a pinned comment under that video. As usual, there are several revisions of the tax code that take effect this year, but this video focuses on those changes that affect the largest number of taxpayers. Here are just some of those changes. A significant change to the Clean Vehicle Credit was implemented in 2024, which allows buyers of clean vehicles to transfer their credit directly to the dealership. There are two advantages to doing this. First, by transferring the credit to the dealer, you can get an immediate reduction in purchase price and, by extension, lower monthly payments. Second, when you transfer the credit to the dealer, your credit is not limited to your tax liability. This is Durwood, age 67, who files as single. His income consists of $21,500 in Social Security benefits, plus a small pension of $4,500. As such, he has no taxable income and thus no tax liability. He purchases a used Chevrolet Bolt for $18,000, which would qualify him to take a used clean vehicle credit of $4,000. Since he had no tax liability, he would get no benefit from the credit if he claimed the credit on a tax return. By transferring the credit to the dealer, however, the dealer reduces his purchase price by $4,000 to $14,000, and thus Durwood gets the full benefit of the credit. The only pitfall to transferring the credit to the dealer would be if your adjusted gross incomes for both 2023 and 2024 exceed the AGI limitation for the credit. In that case, the credit has to be repaid on your tax return as an additional tax. Whenever you purchase a clean vehicle, the dealer must provide you with a Clean Vehicle Seller's Report, which gives all the information about the dealer and buyer and information on the vehicle itself. It also gives the amount of the credit and says if the credit was transferred to the dealer. Forms 8936 and 8936A need to be filed regardless of whether you are claiming the credit on your tax return or transferred it to the dealer. As I said before, if you transferred the credit to the dealer and your adjusted gross incomes for 2023 and 2024 exceed the AGI limitations, the credit needs to be repaid as an additional tax. This additional tax is reported on line 1B or 1C of Schedule 2 and ultimately shows up on line 17 of your Form 1040. There is a great deal more information on the Clean Vehicle Credit, which can be found by watching last year's video on the credit or through links in the video description. A couple of provisions from the Secure 2.0 Act will also be taking effect in 2024. These were discussed in full in my video on Secure 2.0 that was released earlier in 2024. If your company retirement plan allows, you can now take up to $1,000 as a hardship distribution from the plan without paying the 10% early withdrawal penalty. One such withdrawal is allowed every 3 years unless the withdrawal is repaid to the plan. The payer of these distributions may either code the distribution in Box 7 of Form 1099-R as 1 or 2. If the distribution is coded 1, you need to file Form 5329. Enter code 23 on line 2 of the form. If the distribution is coded 2, there is no need to file Form 5329. The distribution is not subject to the penalty. And always keep in mind that this is just an exception to the penalty. These distributions are always subject to regular income tax. And finally, after 2 years, we may finally be seeing a reduction in the dollar threshold for filing Form 1099-K. For the 2022 tax year, the threshold would be set at $5,000. This is expected to decrease gradually year by year until the threshold reaches the intended $600. In anticipation of the lowered threshold amount, the IRS has revised Schedule 1. If you receive a Form 1099-K that consists of personal reimbursements or receive a 1099-K in error, you can indicate that at the top of Schedule 1. Of course, these are only some of the changes to the tax code that are taking effect for 2024, and there are links to a more extensive list of changes in the video description. And as we begin a new tax season, I'd like to give a sincere thanks to all of you who have watched, liked, shared, commented, and subscribed. And if you haven't subscribed yet, now would be the perfect time to do so as we begin a new tax season. And all through the season, your questions, comments, and suggestions will be welcome in the comment sections of all videos, including this one. Thanks for watching, and I'll be back throughout the 2025 tax season and beyond with more of your taxes oversimplified.